Welcome to Accounting with Madam Mumbi. So today we are going to look at an introduction to cost accounting. Cost accounting is one of the branches of accounting among many other branches of accounting like auditing, management accounting, financial accounting, and taxation. So specifically, we are going to start by introducing what is cost accounting. And cost accounting, just as the name suggests, it is a branch of accounting that deals with cost. So in an organization, this branch of accounting deals with cost ascertainment. So you determine how much cost, for example, is used in production, how much cost is used in service delivery. So that is cost ascertainment. Once you ascertain the cost, you also evaluate the cost. When you talk about cost evaluation, we are comparing this cost based on an agreed standard. You're going to look at what are standards later, but a standard is a predetermined cost, for example, of a product. So we do cost evaluation by comparing it with the standards, and then we do cost control. Once we have evaluated the cost, we're able to identify whether it was more than we expected or less than we expected, and then we can do what you're calling cost control or controlling of the cost. So this branch of accounting where we are dealing with costs from the ascertainment to evaluation and cost control is the one that we call cost accounting. Now, why do we need cost accounting, or why do we need to do these functions? The major reason, number one, is for inventory valuation. Inventory is another name for stock. So simply what you're saying here, it is for purposes of valuation of stock. It is also helpful when you're pricing a product. You want to determine what price are you going to attach to a certain product. Therefore, you need to know the cost of the product. Also, development of cost standards. After evaluating how cost in an organization for a period of time, you can be able to evaluate or develop standards and say, for example, to make product X requires a certain amount of cost. So the standard cost of producing that unit will be given based on the data about that product. Then you're going to do what you call variance analysis, which is comparing the standard and the actual cost and determining what you call a variation or a variance. And finally, just for overall decision making. So cost accounting, we are going to look at later how this is different from management accounting. So to proceed, we are going to first of all define some key terms that are used in cost accounting. And the first one, of course, being cost itself. So what is cost? Simply, cost is a sacrifice that is made in terms of resources that are given up to either acquire a product or to deliver a service. So simply that sacrifice of the resources that are given up to meet that objective, either being to produce a product or to deliver a service, is what you call cost. So that is what you have here, that cost is a sacrifice that is made, usually that is measured by the amount of resources that are given up to deliver a certain particular objective. Now, the next terminology is cost unit, or what you call a cost object. And I want us to differentiate this cost unit with what you call unit cost, which is the next terminology here. So cost unit or the cost object, it is the object itself. It is a product. It is the service against which a cost is ascertained. So when you call a cost unit or a cost object, it is the object itself. It is the unit itself against which ascertainment of costs is required. For example, in a manufacturing organization, the products are the cost units, or they are the cost objects. So they are the products or the services in relation to which we measure cost. Now, how is that different from a unit cost? Now, unit cost is the cost of producing that one unit. So unit cost, I repeat, it is now the cost that is used to produce one unit of either the product or the service. And that's the difference. while the cost unit or the cost object is the object itself or the unit itself against for which cost is measured. A unit cost is the cost of producing that one unit. And these terminologies are going to be very helpful as we carry on several issues in cost accounting. Other terminologies that we are going to come across is, for example, a cost center. Now, as the name suggests, this is a center where it can either be a department, a segment of the organization, where cost is incurred, it is accumulated, it is fixed and controlled. So a cost center, the management or the manager of a cost center has the responsibility to incur costs, to fix costs, to control costs, and to report about the cost. So that is what you mean by a cost center. It would be different from a profit center. Like for example, you can say a production department is a cost center because most of the work in the production department relates to incurring costs, fixing costs, and controlling the cost. The next terminology is what we call a cost driver. Now, what is a driver? A driver is something that causes something to move. It is that mindset that we define a cost driver as any activity that results in the incurrence of cost. In fact, we would simply say that it is any activity that causes the cost to move from one point to another, mostly to increase. For example, we can have number of products as a cost driver. If you produce one product or one item, the cost is at a particular level. The more the units of production, the more the cost increases. So we can therefore say that the product is a cost driver. It could also be machine hours. If you operate a machine for 1 hour, the cost of operating the machine is a certain level. The more the number of hours you operate the machine, of course, the more the cost of running the machine. So simply, a cost driver is any activity that causes cost to move from one point to another, is what you're calling a cost driver. And it will be all those things. It will be the number of products produced, could be number of labor hours, could also be the machine hours, etc. So I hope you understand that, what is a cost driver. The next one is a cost accountant. All right. Definitely, this is an individual who is a member of the accounting profession who is in charge of a cost department. What they do in this department is what we have said, the overall function of cost accounting. So the accountant is responsible for collecting data about the products, collecting data about all the costs, and preparing timely reports that are required by management for decision making. So if you are a member of the cost department here as a professional accountant, is what you're calling a cost accountant. Another two terminologies that we are going to define or differentiate is cost allocation and cost apportionment. Now let's start with cost allocation. Now, what is the meaning of allocation, or when you allocate? So when you allocate, it is where you take the entire overhead. And now maybe this brings me to the question, what is an overhead? An overhead is an indirect cost. For example, electricity is an overhead. Electricity being an overhead, it is incurred probably by all departments in an organization, from production, accounting, sales departments. All right? Now, when you talk about allocating, it is where you charge the entire overhead to a certain department that is known to incur that cost. So there are certain overheads or certain costs. You look at this cost and you know this is a cost that is specifically belonging to a certain department. For example, if you have factory insurance, that is an overhead. And you know that this cost, which is factory insurance, it cannot be charged to selling, It cannot be charged to accounting. It is going to simply and specifically be allocated to the manufacturing department, which is now the factory. So when you talk about cost allocation, is where you take the entire overhead and charge it to a certain department or to a certain segment or to a certain section that is known to incur that cost. Now this is different from cost apportionment. From the word portion, because cost apportionment, you can see the word portion here. And that means we are dividing a certain cost into different portions using a suitable basis. Let's come back to our example of electricity being an overhead. Once we get the electricity charge for the whole organization, we may decide to apportion it to all the departments so that we say either based on the area of the office area or based on the square meter of the office or number of employees, we may decide those are several suitable bases that we can use to apportion an overhead. So I repeat that cost apportionment is where now you charge a fair portion of the organization overhead to various departments using a suitable basis. So you choose which is the suitable basis that we can use to apportion the overheads. And when you are going to come to cost allocation and apportionment as a topic, we are going to see different bases or suitable bases that we can use to divide a cost amongst different departments. So those are the terminologies that we are going to be using in cost accounting. So what is the purpose of cost accounting? Some of them we have mentioned already, but the first and the major purpose of accounting, of cost accounting, is to ascertain costs. Simply determining how much cost. Do all the products, how much cost do they cost? All the services, how much cost? All those are first of all ascertained in terms of how much cost, both direct cost and indirect cost. All of them you ascertain how much cost. The second purpose of cost accounting is planning and budgeting. We have talked about standard costing here a little bit, where you set some standards and say, this is a pre-planned or predetermined cost of a certain item. And that helps you to plan. It helps you to budget. In fact, it helps you to know how much is your forecast for the next period. So through cost accounting, you are able to do planning or forecasting for the future and develop what you call budgets. These budgets would be the sales budget, production budget, material usage budget, material purchase budget, and all that. Another purpose of cost accounting is resource allocation. So you determine how resources are going to be shared in an organization. And of course, resources represent a cost. So you're able to determine how are these resources going to be shared amongst different segments and different departments in the organizations. The next one is performance evaluation. Now, when we talk about performance evaluation, it is closely related to what you have called cost control, and it's also closely related to analysis of variance. When you talk about performance evaluation, it is comparing the standard against the actual performance and determining, is the manager, for example, able to meet the target? If a cost was predetermined, maybe cost of manufacturing, to be a certain amount, you compare it to the actual cost that was incurred, and then you're able to do what you call performance evaluation of that department, of an individual, against a set target. So performance evaluation requires you to compare the standard or the target vis-a-vis the actual, so that you're able to make good decisions. Other purposes of cost accounting is cost control. We have talked about this. I do not need to repeat on it. Of course, for you to improve efficiency, you have to see all the loopholes where costs either have gone above the expectations and do what corrective action needs to be done to ensure that there is efficiency and reduction of costs. in the organization. It assists in policy formulation. For example, you want to decide between making a certain product and buying that product from an external supplier. So you want to develop a policy whether a certain product should be produced in the organization or it should be bought from an external supplier. So for you to be able to formulate that policy, you have to use the branch of cost accounting, where you determine how much cost does it require you to make the product, and how much cost does it require you to buy the product from an external supplier. And looking at these costs, you look at what is the differential cost between making a product and buying a product. And from there, based on that information, you can be able to develop a policy or formulate a policy that a certain product should be made while a certain product should be bought, because it is cheaper to buy a certain product and it is probably cheaper to make a certain product within the organization. Finally, we can say that cost accounting assists in fixing of prices. Definitely, you cannot wake up and just fix prices of products without a background. So cost accounting or cost data about the product is very influential, it is very purposeful, and it is very helpful when you're determining how much price you're going to charge for all your products. So we are going to look at the distinction of financial accounting and cost accounting. Let's start first of all by defining what is financial accounting. Financial accounting is a branch of accounting that focuses on providing general purpose information about the whole organization to both the internal users and external users. In financial accounting, we mostly dwell on preparation of financial statements, that is, the income statement and the statement of financial position, commonly known as the balance sheet. That branch of accounting that deals with preparation of those financial statements, both for internal and external users, is what we call financial accounting. Now, coming back to what is cost accounting, we have said it is a branch of accounting that deals with cost ascertainment, cost evaluation, and cost control. So specifically, cost accounting looks at costs in an organization. Now, what are the major differences between financial accounting and cost accounting? I have summarized them as below. Let's begin with the purpose. Now, we have said that financial accounting purpose is to prepare financial statements, or what we call the income statement and the statement of financial position. That is the major purpose. On the other hand, cost accounting, it is to provide detailed cost data for management decision making. That is, the data is provided for people inside the organization, the management. Let's also look at another distinction in terms of regulation. Now, financial accounting is regulated by what we call the generally acceptable accounting principles, the GAAPs. It is a well-regulated branch of accounting, so that financial accounting, while you're preparing the income statement, the statement of financial position, the cash flow statements, all these have certain standards that you have to follow. You have to also follow what you call the generally acceptable accounting principles. So cost accounting, on the other hand, it does not have a regulation. So in simple terms, cost accounting reports are prepared as per the need of management. Whatever the manager wants, in whichever format they want them, that is what they are given, because there is no regulation on how it should be done. Let's look at the focus. While financial accounting focuses on the whole organization, the organization as a whole. How much was the profit for the whole organization? What is the state of a financial position for the whole organization? Focus is for the whole organization. Cost accounting, on the other hand, it focuses on products, segments, departments, So it focuses on different sections of the organization. So the focus here is different. It can either be even a focus on a single product, or a focus on a single service, a focus on a single segment or a department. So that is some of the key differentiation between financial accounting and cost accounting. Other differences may be what we call, number one, statutory requirements. Now, financial accounts for some organizations, especially companies that are registered and that are trading under the stock exchange, preparation of the financial statements is mandatory. It is statutory requirement for those organizations. But cost accounting is voluntary. It is maintained as per the needs of management. So, another form of differentiation or basis of differentiation is the type of information. Financial accounting focuses on monetary, quantitative information. Focus of financial accounting is how much, what quantity. It does not look at qualitative characteristics. For example, in financial accounting, we record how much salary was paid to employees, but we do not focus on whether the employees are motivated or not, because motivation is qualitative, but how much was paid to the employees is quantitative. So in financial accounting, it focuses on quantitative data, or data that is predominantly monetary. When you look at cost accounting, it focuses on both the quantitative and qualitative characteristics. Key decisions in cost accounting do not simply rely on monetary. They also rely on qualitative qualitative characteristics. For example, when you are making a decision whether to make a product or to buy a product, despite looking at the cost characteristics of either decision, you also have to look at qualitative characteristics. Like, for example, if you decide to make the product, do you have the relevant skills? Do you have the idle capacity? Do you have the ability to maintain the product quality? Those are key qualitative characteristics that you will look for while you're making a decision, for example, whether to make a product or to buy a product, which is something that can be done in cost accounting. So, the next differentiation is on usage. Who uses or who requires the information? I've already mentioned that in financial accounting, the information is for both internal and external users. But for cost accounting, the information is majorly for internal users because this is private information. Finally, on the timing, financial accounting looks at historical data, what has already occurred. So it focuses on reporting what has already taken place, while cost accounting, on the other hand, it is futuristic. It looks at or emphasizes on the future. So it focuses on planning, budgeting, forecasting, or what will happen in future. It is futuristic. So to conclude on this introduction to cost accounting, let's try and differentiate cost accounting from management accounting. Now, management accounting is also a branch of accounting that focuses on providing information to management. I repeat that management accounting is also a branch of accounting that focuses on providing information to management, who are the internal users. The kind of information that management accounting provides relates to cost, pricing, policy formulation, controlling. All these decisions, all this information is only for one purpose, what we call management decision making. So according to CIMA, it defines that management accounting is a branch of accounting that deals with provision of information required by the management, as I have said, for such purposes as formulation of policies, planning and controlling the activities of the organization, and decision making of the entire organization on different courses of action. Now, this is quite interesting because if you read through this definition, you are going to see that a lot of these items have also been mentioned as the purpose of cost accounting. And what am I leading to? What I'm leading to is the conclusion that cost accounting and management accounting have basically almost the same functions. Basically, cost accounting and management accounting have the same functions. Now, while cost accounting just focuses on costs, management accounting is broader. It focuses on policy formulation. It incorporates other techniques that enables it to be a decision-making tool. Therefore, it is safe to conclude that management accounting is wider. It is bigger than cost accounting, and therefore conclude further that cost accounting is just a subset of management accounting. So again, when you're going to be defining management accounting, we are going to realize that there is an overlap between management accounting and cost accounting, and all of them are going to use this knowledge that we have learned in terms of what is cost, what are the different cost elements, definition of key terms that are used both in cost accounting and management accounting, because as you are saying, these two branches, it's just that one is wider than the other. So that is it for today in Introduction to Cost Accounting. I hope you have found this video enlightening, and I hope that you're going to subscribe to this channel. So share, like, and subscribe. Thank you.